Good evening, everyone. Welcome to closing comments here for January 8th. Let's jump right into our charts and see what happened across the markets today. First on the board, we got our February live cattle. Today we did see this live cattle market briefly undercutting the prior day's low. However, the bulls were able to step in and offer good buyer support down near 233. This market was able to rally into the close today, finishing back above 235, showing a good finish by the bulls. They want to take some of that late day momentum into tomorrow's session, finish this week on a high note. To do that, they need to get some bids rolling above 235.82, which was today's high. If we can see here on our volume profile charts, we got a pretty heavy concentration of volume here between 35 and 35.80, showing a good breakout line at today's high. If the bulls are able to take out above these prior 2-day highs and get it back above our bull pivot there at 236.30, should be pretty smooth sailing to the upside once again here for this live cattle market. Look for the bulls to have the 240s set in their sights and get this uptrend back on track and keep these live cattle prices moving higher. Look for the bulls to try and finish strong tomorrow. If not, we do still have plenty of support down here between 227 and 232 and our major moving averages. So if we continue to dip, look for better buying opportunities down here near our moving averages. But a good finish here today by the bulls shows that we could have some more upside here to finish out the week. So look for the bulls to get a nice strong push here and finish this week on a high note. Next up, our March feeders. Showing pretty similar story here today. We did briefly undercut that prior day's low, but once again still seeing good support like we've seen all week long at our bull pivot there at 353.5. Bulls were able to test that level here and offer good support, rallying right back up there into that opening range. Once again, heavy concentration of volume up here, drawing a nice hard line right there around 358. Bulls are able to get above today's high at 358.30. Should get that momentum rolling once again and push this market back up there into the 360s and potentially up towards 370. Next target here for the upside, if the bulls are able to take out the current week's high, is going to be this overhead gap up here. So look for the uptrend to keep on pushing higher, and this feeder and fat markets to keep moving higher here throughout the month of January. Next up, March corn futures still trading range bound. Not a whole lot to be said about this market other than don't diddle in the middle, stay close to the edges if you're going to start getting involved here. As we can see, a lot of that mess has been made here in the middle. Wait for the extremes here at the bottom quarter or top quarter of this market to get involved. Look for this thing to keep on trading range bound, and until we can get a clear beyond either edge here, this market should be pretty sticky and comfortable here around $4.5. Look for this range bound action continue here across this corn market. And next up, crude oil prices seeing a pretty sharp rally here today, pushing back up into that 50-day moving average, taking back the last 2 days worth of losses. At the moment, this market continues to see good pushback down here near the 55 and 56 level. This has been a pretty good support line here all year long. We've tested it multiple times throughout the last 7-8 months, and continues to be a good bounce point here for the bulls. At the moment, this market has been in a slow, steady bleed here since this the U.S. bombed Iran back here this summer. Slow, steady bleed since then has gotten this market down here into some oversold conditions. Things getting a little tight here, putting some pressure up on that 50-day moving average. However, over the last 2 months, we continue to see that 50-day act as a hard line here for the bears, and they always get a good pushback off of it. Heavy volume reversal here today says that we might want to just be a little bit cautious. If the bulls are able to get some bids up here above our bull pivot at 58.88, up here towards 59, it's going to give us a breakout of our 20-day high and get this thing to pop a little bit. With this thing being so beat down over the last couple months, just could be a little bit of a short covering rally. See this thing spike back up here into the 60s a little bit. But this market still remains in a downtrend at the moment, and as long as we're trading below this 50-day moving average, look for the bears to stay in control. Just want to be cautious and get out of the way if we see any volatility or bids get rolling here above 59 throughout tomorrow's session or into next week. So look for that 50-day line to be a good spot, in the good line in the sand to trade around here over the next couple days. Equity markets seeing a little bit of support here today. NASDAQ being the weakest of the bunch, briefly testing that 20-day average once again and undercutting that prior day's low. However, this market just continues to get tight up here against this key level here between 25.8 and 26,000. Look for the bulls to continue to put up some pressure on that level. We need to get some bids here above some of the current week's highs and see this thing get a nice strong close up there above 26,000, get this breakout rolling. We still have the Dow being the strongest of the bunch, seeing a nice pushback here today, and we should see this uptrend pushing on this Dow index up there towards 50,000. S&P also seeing good support here down near our bull pivot at 69.40 today, rallying into the close and finishing up there near the highs. Need to get some bids above today's high at 69.77 to keep pushing this market higher. But if we do, we should see this thing head back up there towards 7,000 and new all-time highs. Uptrend still remains intact here across the S&P and the Dow. We need to get a breakout above that key level here on the NASDAQ to confirm that and get a little extra boost from that tech sector. But at the moment, prices tightening and contracting here, looking like we should see a nice little breakout and see these equity indexes start heading higher throughout quarter one. So look for the upside to continue here in the stock market. Other than that, that's all we got for this week. We will be off tomorrow. We will catch you over the weekend for our week 2 market watch. Thank you everyone for tuning in this week. We'll see you this weekend. Have a good night.